The imbalances that are being built up in the world, particularly the westernized economies, are maybe something akin to maybe a fault line. You know, if you know of earthquakes, that a tension will build up on that fault line for only so long to the point that it just rips. The tension that's building up on a global basis is the mass and the size of the global debt, and in particular the global debt of the United States. The breaking point is kind of where we are right now. We're at a point in time right now where there simply isn't enough demand to absorb all the funding needs of the U.S. economy, nor of the Western economies. And that's why QE2 exists. We're basically buying our own paper. We talked about it this morning that a store, cashier number one, sells a can of beer to cashier number two, and somehow this is recorded as a sale, but there's no sale that's taken place. In the United States, we might want to vilify China. We might want to vilify Asia, or say or bash the Chinese, or bash Asia, or Vietnam, or Bangladesh, or India, but it's really just economics. I mean, the cost of production, the cost of simply producing something in the United States is so disproportionately high that the finished item is it's not competitive, which gives the United States virtually no means to ever repay the debt that it's accumulated, because the only way that we could repay the debt would be how? To export our way out of it. And so what do? Either you have a global war where we sell weapons into that global war, or we actually start producing things. Or what you have is a crisis that we lay out in the book, and we lay it out in a 14-day timeline where China stops buying U.S. debt, and in a series of steps that happens over 14 days, all hell breaks loose across the world with a meeting of the IMF and a decision to reset all global westernized debt in one fell swoop. And that the only solution, this we lay out in the book the day after the dollar crashes, that the only solution is a realignment of global currencies and a new currency. Well, in the book, we lay it out that it's China basically saying no to the buying of U.S. debt. But I think without an actual official announcement, I think we're already there. We've seen China make announcements with Russia that they're going to start using other currencies, their own currencies, to start facilitating trade. That's a huge announcement. I mean, I think if we really look at it, you know, when is a company bankrupt? A company's bankrupt when what? There are no more customers. When they're no longer selling goods. When they're like really no longer profitable. We're long since past that. The United States is functionally bankrupt right now. Well, I think you want to watch the dollar. You want to watch the dollar against a basket of currencies. If we get a break in the dollar below a certain price, and we're watching what that price is, we will move aggressively as an investment firm, because I also run 9 Points Capital Partners. I will move aggressively from an investment manager standpoint to start placing assets to benefit from a dollar's meltdown. Well, you can either find ways to short the dollar, or hedge with maybe options or that might leverage yourself against the dollar. We might build that up with being long currencies that had more resources. They might be the Aussie dollar. They might be the Swiss franc. They might be the Looming. The central message of my book is to embrace. May we live to see a day where the world is united in peace and harmony, where we may see each other through our hearts and not our eyes.